Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into Terra Property Trust Inc.'s latest filing, and let's just say they're talking about paying down some significant debt. Stick around because understanding how companies manage their debt can tell you a lot about their future plans and potential pitfalls. Before we jump in, if you find value in these deep dives into corporate documents, make sure to hit that subscribe button. And hey, we have a great community over on Discord, link in the description where we discuss these filings and more. So, what is the big news from Terra Property Trust Inc., or TPT as we call them for short? Well, it looks like they re-planning to clear out some of their existing debt. Specifically, they mentioned repaying their 6.00% senior notes that are due in 2026, and they also want their wholly owned subsidiary, Terra LLC, to pay off its own 7.00% senior notes also due in 2026. They plan to do this through various methods like regular loan payments, selling off some assets, and bringing in new money through debt or equity. Now, what is really interesting here is the context they provide. They've been talking to potential investors and lenders, and they re-highlighting how they've been strengthening their financial foundation. They say they've adapted their strategy to use less borrowed money compared to other companies in the mortgage real estate investment trust sector, especially because interest rates have been going up. This is a smart move because higher interest rates make it more expensive to borrow money, and that can really hurt companies that rely heavily on debt. They impressively highlight that over the last 3 years, ending the 30th of September 2025, they've already paid back around $200 million of their debts. That is a significant chunk of change. While this filing doesn't have detailed financial tables for us to pore over, it is important to understand what these notes mean. These are essentially loans that Terra Property Trust Inc. took out, and they promised to pay back the principal amount by the 30th of June 2026 with interest. The fact that they proactively planning to repay them, even before the due date, suggests a few things. It could mean they've come into some cash from operations, or asset sales, or they've secured new, possibly cheaper financing. It could also be a sign of confidence in their future earnings potential to manage these obligations smoothly. Another detail worth noting is that Terra Property Trust is identifying itself as an emerging growth company. This typically means they have less than a certain amount of revenue and haven't been around for too long. They've also elected not to use the extended time period to follow new accounting rules. This shows they want to get on the same page as other established companies, which can be seen as a positive sign of transparency and commitment to standard financial practices. Now, let's look at the bigger picture. Terra Property Trust Inc. is essentially signaling a deleveraging strategy. They want to reduce their debt burden. In the world of business, debt can be a double-edged sword. It can fuel growth, but if not managed well, especially in a rising interest rate environment, it can lead to serious financial trouble. Their proactive repayment plan, coupled with their comments about a more conservative leverage strategy compared to peers, suggests they are trying to navigate the current economic climate prudently. What are the risks for a company like this? Well, if their asset sales or new financings don't go as planned, they might not be able to repay those notes on time, which could lead to penalties or a credit rating downgrade. Also, the commercial real estate market has its own set of challenges, including shifting tenant demands and economic slowdowns. However, by reducing their debt, they are making themselves more resilient to these potential downturns. They are essentially reducing their fixed obligations, which is a strong defensive move. It is a bit like an individual paying down their mortgage early to have less financial pressure each month. In conclusion, Terra Property Trust Inc. appears to be taking a strategic step to shore up its financial position by actively planning to repay its upcoming debt obligations. This move, along with their stated commitment to a more conservative leverage strategy, points towards a management team focused on long-term stability and navigating market challenges effectively. While the lack of detailed financials in this specific report means we can't do a deep number dive, the narrative here is one of proactive financial management. It's a solid indication they are prioritizing a healthier balance sheet moving forward. Alright, that is our breakdown of Terra Property Trust Inc. Its latest filing. What is your take on their debt reduction strategy? Do you think this is a smart move or a sign of underlying weakness? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button, it really helps us out. And as always, subscribe for regular dives into what corporate filings really mean. Don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.